after 2 horrific days in a row. It looks like the market's finally taking this coronavirus seriously. Now, I've been screaming that this outlook would do huge damage to the global economy. Nobody seemed to want to take me seriously until the last 2 days. Now that Wall Street's woken up to the danger, how much more downside could there be in the industrials, particularly one of the ones in the blast radius of the pandemic? Rather than focusing on the fundamentals, we need to go off the charts with the help of Tim Collins. He's a brilliant technician, my colleague at realmoney.com, to get an unemotional sense of what might be happening to these stocks now that the sentiment's turned so negative. There are a couple in particular. Collins had a lot of them, but he's worried about 2 that I thought really were representative of the much larger industries that we're worried about, and that's Intel and Caterpillar. Yeah, it's going to be tough. Why don't we start with the weekly chart of Intel? Now, here's a stock that spent the better part of the last 6 months on a complete roll, at least until the outbreak. Intel's been a dream for the bulls, but unless the stock can make a sharp rebound in the next few days, Collins thinks that dream may quickly turn into an unmitigated nightmare. Over the past few months, before the recent breakdown, Intel had been trading sideways pretty tight range after a huge rally at the end of January. So right here, it's just been doing nothing, okay? See that? That action created what is known as a bullish flag pattern. I mentioned the last few weeks, not the last 2 months. It's bullish flag pattern. Now, this is really important because it's a sign that the stock is catching its breath before launching into another leg higher. But not this time. Instead, the bottom of that flag formation failed to hold yesterday. I don't know if you can see. I hope you can see that. It failed to hold. And now Intel's gone from possible breakout to possible breakdown in the course of a couple sessions. Stock now just below $60. You got not one but 2 ceilings of resistance around 64 and 68. Now, Collins thinks that the more likely, well, let's just say 58 is probably most likely. And then maybe that 55 before it finds a bottom. What makes him so gloomy? In part, it's because the darn thing has fallen below its 10-week moving average. Okay, so that's the blue, okay? And that's that little red thing I keep showing you about. Whenever Intel's done this over the past year, it's been trouble. What happened last April? We go back here. Look at this. Stock plummeted from the 50s to the low 40s over the course of a month. Meanwhile, check out the stochastic relative strength index, or the stock RSI down at the bottom. This is a combination of 2 momentum indicators, and right now it's giving you an extremely bearish reading, just like, again, the April of 2019 that you wanted to avoid. Even worse, Intel's far from oversold. In fact, when you look at the full stochastic oscillator, which measures whether stock might be overbought or oversold, Intel's still not that far from overbought territory. That means it has come up too far too fast and was likely due for a drubbing. And this is kind of what I've been emphasizing from the top of the show. These things haven't done enough work, is what we'd say. This has got to go lower. Put it all together, and Intel's chart is an eerie resemblance to that breakdown that we saw last April. That didn't end well for the bulls, and unless the stock makes a dramatic comeback over the next few days, Collins is betting the history will repeat itself, and so am I. All right, now here's another one that has been, that was so hot, not anymore. It's called Caterpillar. It's one of the best-run industrials out there. Yet with a worldwide slowdown seemingly inevitable, the industrials are the last group you want to own. And that's why Cat stock is looking like a dog here. How ugly could this one get? As long as Caterpillar can hold above 130, something I don't think is that likely, but at the end of the week, Collins thinks you could be in the clear. But if the stock gives you a weekly close below 130 and it closed at 129 today, then he says his dog has serious teeth. Where? While Cat's had a bad year so far in 2020, the full stochastic oscillator still hasn't reached oversold territory. Again, my theme, okay? We're not oversold yet. It's got a slowly descending downslope. That's not a good sign. But the heart of the bear thesis lies in the price action. If Caterpillar doesn't get any bounce from these levels, then its 10-week moving average will be on track to close below the 21-week moving average. When that same crossover happened last summer, this stock got pulverized. It's going to be worse this time, I think. Even worse. If CAT closes below 130 on Friday, that will trigger a bearish head and shoulders pattern. And boy, is that ever the most reliably negative patterns out there. Based on that head and shoulders, Collins believes that this stock could fall another 10% from these levels. Below 130, the bears are firmly in control of this one. Caterpillar's 3 days to rebound back above that level, or it is in real trouble. Here's the bottom line. This market's been put through the meat grinder. But the charts of Intel and Caterpillar, as interpreted by Tim Collins, suggest that some major stocks could still have a lot more downside. He had so many others we could have done. We're not oversold enough yet, people. We're not. Let's go to David in New Jersey, please, David.
Yes, hello, Jim. How are you?
I am good, David. How about you?
Excellent. Quick question. What do you think about Ford Motor Company?
52-week low. No real earnings momentum. I got worries about weakness all over the world. 8.3% yield. I know they want to protect that dividend, but I'm going to have to tell you no. No. I never reach for yield, ever. Intel and Caterpillar are representative of much larger industries, and the chart suggests that they could head down, maybe substantially. And that's worth keeping in mind, isn't it? Because we're not that oversold yet. Much more Mad Money on a major announcement after the close. The Salesforce co-CEO Keith Block is stepping down. I'm going to talk with now CEO, plainly by himself, Mark Benioff, about what it means for the company going forward. Then, an under-the-radar fintech player that could be worth considering in this uncertain market. I'll reveal the name when I sit down with the CEO. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.